Here are some self-assessment tax return tips you need to know. First of all, file by the 31st of January. If you do not, there are going to be penalties, and the longer you leave it, those penalties will only get worse. Make sure you pay your tax on the same date, the 31st of January. Failure to make that payment will also incur interest. And bearing in mind interest charges are now higher, those interest payments that you will have to make to HMRC will be even more. Pay your payment on account on the 31st of January and the 31st of July. If you have tax due and HMRC required payments on account, they will again charge you interest if you do not make those payments on account. Check your return of you and your spouse, if you are married of course. What you want to do is make sure you understand why someone is paying more tax than you and vice versa, and then divvy up your income generating assets between you in the future to be more tax efficient. And lastly, identify some tax-free income that you can earn for next year, whether that's using ISAs, some property income, rental room allowance, some interest from bank accounts and dividends. Some of those may be tax-free, so make sure you make the most of those for next year.